Okay, all right. Good afternoon, everyone. This is Mr. Kimbode, the King of Waves, and of course, this is coming from Potential Miners International, a research platform that is dedicated to researching into areas where we can harness potential for individuals, corporate level, and government level to advance. And of course, one of the things that we have been able to do over the years is we have been able to research into the forex market, and we have been able to come up with an holistic approach to analyzing the market and taking opportunities in the market. And of course, like we do every week, today again we want to have a session where we look at the forex market, we look at different currency pairs, we look at different assets together from the global macro perspective. And this is very important so as to help our community and of course any interested trader to connect to us on weekly basis, on a monthly basis, to know the trajectory of currency pairs or assets in the forex market. And of course, today we are going to quickly dive into what we have. And let me quickly share this so that you will know the scope of our analysis. What we do at Potential Miners International is that we look at the forex market from the fundamental perspective, which we call identification protocol. And of course, that is the fundamental storyline. We also look at the forex market from the sentiment storyline. And of course, we now narrow down our analysis to the technical storyline. And we are going to be doing that. And of course, let me quickly share this link for as many that will be interested to join. Please, as you come on board, just let me know where you are joining us from. And of course, if this is your first time of joining us live, on this global macro trading analysis on live session with the King of Waves. So today we are going to start with our fundamental analysis like we used to do. Please, as you join, please let me know where you are joining us from. It's very important. And of course, it will interest you to probably look for the link to our Telegram channel so that you can connect with the community of professional traders that we are building. This is very important, and this is going to be very helpful to your trading success. Without further ado, let's just dive straight into what we have. So at Potential Miners International, what we usually do is to start our analysis with the fundamental. We'll go straight to look at the summary of the fundamental storyline of the 8 major currencies of the world. And of course, after that, we'll now look at what are we expecting uh, for the week. Let me quickly post the link on our Telegram channel so that we can connect. This is very important so that we can join and we can have a nice time together. All right. All right. Okay. I think I've been able to do that. All right, please, you can join now. So let's see. Um, okay, let's go straight to the technical. The fundamental storyline. Let's see what we have. So when we get to the fundamental storyline, what we are interested in is what is the summary of all the fundamental indicator, or fundamental economic position or stand for each of the currencies or each of the countries. So when we say United States dollars, what we mean is that we are analyzing the fundamental of the United States as a country. And this is important. And of course, we have said it here, we have been a part of this live session, said it here that because we have a lot of economic indicators, we have been able to look at the transmission mechanism of each of these indicators, and we have been able to narrow our fundamental storyline to a very simplistic approach in which we look at the interest rate where the interest rate is probably coming from, where the interest rate is at the moment, and of course, what are we expecting, especially for the week? Are we expecting any news event that can shift the interest rate decision looking forward? And that's what we do when we do our fundamental analysis. So let's just go straight. What we have to do is to look at the interest rate. If you have seen this before, maybe the previous week, I don't want you to assume. You will just still take your time. It's not going to take more than maybe 2 minutes or maybe 1 minute to just overview the interest rate. And the focus of you overviewing the interest rate is the divergence in the interest rate. I want you to take note and pay close attention to that. Is our concern really is the divergence. What we are saying when we say divergence is we want to look at where is the largest differences in terms of interest rates when you compare two currencies. So let's just look at it. The highest interest rate is 3.75, and that is for Great British Pound and United States dollar. Next in line is the Australian dollar with 3.6%. I want to believe you can see my analysis, yes, on the left corner of the screen. Okay, I believe you can see me. So this is where I'm pointing your attention to. The interest rate for GBP is 3.75, and of course that of United States dollar is 3.75, Australian dollar 3.6, Canada 2.25, New Zealand dollar 2.25, euro is 2.15, JPY is 0.75, while CHF, which happens to be the safest safe haven currency as of now, is 0.00. So what we do is to pay close attention to currency pairs with the largest, or relatively large interest rate divergence. What do I mean by that? When you pair GBP JPY, you will notice that by the time you subtract 0.75 from 3 point, I mean you sub yes 0.75 from 3.75, you will still have a very large interest rate difference compared to when you want to subtract 0.75 from 2.25. So what that means is that on a larger scale, the starting point of any storyline when it comes to forex trading is the interest rate position. This is very important. Interest rate position, and you want to compare currencies with the lowest interest rate probably with currencies with a relatively high interest rate, and that is how we identify assets that we are likely going to be putting our money in, and that is very important. The stage of our analysis that we call the identification protocol is where we look at assets that we are likely going to be looking into, or we are likely going to be putting our money in. However, if you rely on the fundamental alone, you will hit roadblock a lot of time. This is because regardless of what the fundamental is saying, what really matter is the perspective or the sentiment of the market at any point in time. Even when you have, for instance, GBP to have 3.75, and of course if you compare it with JPY that has interest rate of 0.75, GBP that has interest rate of 3.75 compared to JPY that has interest rate of 0.75, literally you are expected that there should be a one-way carry trade activity to be going on, which means expectedly people should be selling their JPY to buy the GBP in terms of carry trade because of the interest rate divergence. But because we still have other geopolitical events that can disrupt the tone of things or the pace of things, so you want to really take, and investors they pay close attention to these geopolitical situation or position or event. And that is what really shifts most of the time the tone of sentiment in the market. So the next thing we do is we do our sentiment analysis. I want to believe that you can still hear me loud and clear. All right. So when you now get to the sentiment storyline, what you want to do is that you want to overview what is the risk sentiment overview of the global market now. I want you to know that what we are doing is to look at the global, the forex market from the global macro perspective. Global macro perspective means we are considering the fundamentals across the eight major countries that rules or that plays out in the market, the majors, and which of course I've identified when I was talking about the interest rates. Those are the eight major countries that we focus on, especially at Potential Miners International. We look at their fundamentals, then we now move ahead or go ahead to look at what is the sentiment of the global market in terms of risk on, risk off, dollar aversion, and all sorts. So let's just quickly, we have indices that we use because we really want this approach to be very easy to apply for an average trader. So we have indices that we use to gauge the risk sentiment overview of the market on the global level. And I'm going to walk you through those indices like I used to do, so that in case you want to analyze, at your own hand, you know how to view things. So let's quickly dive into the chart. Let's go into the chart. Say, okay, let me see. Okay, I think we are good now. So I want you to pay close attention. What we use 5 indices to gauge the sentiment storyline of the forex market at any point in time. And I want to quickly run you through those indices. If this is your first time of seeing this video, you might need to pay close attention. Of course, if you have been here or you have been listening to some of our videos, you are already familiar with some of these indices. So the first one we consider when we are looking at the sentiment storyline is the S&P 500. What is the position of S&P 500 on the global level? This position is going to show us to what degree are investors ready to risk their money in the market. That's what S&P 500 overview is showing us. And of course, we want to look at the overview on the daily. What is the structure of S&P 500? If we have a predominantly upward trend, it means that investors, they are really ready to put their money on the line, which means there is a risk on tone in the market. And of course, to buttress that particular assertion, we also consider 2 other indices before we now move into the VIX and the DXY. So the other index that we look into to look at what is the position of investment on a global level. Looking at stock indices, we look at the Nasdaq Composite Index. Once we have this index still giving us a buy structure, especially on the daily, is a confirmation, like a double confirmation, that there is a level of risk on in the market. Risk on means that investors, they have confidence to put their money to work in the global financial market, and of course that is going to be reflective in the movement of stock. And then if there is a level of panic, investors will withdraw their money, because these are high yield assets. They want to withdraw their money into something that is safer. But if you have on the daily, at any point in time, you have the index or some of these indices looking up or moving up in a structure, in a bullish structure, what that means is that investors, they are really ready to risk their money, which means there is a risk on. So the next one, which is the The one we use to triple check if there's an English like that is what we call the Dow Jones Industrial Average Index. Immediately you check these three indices and they are all showing you a bullish market structure. You have three confirmation that there is a risk on tone in the market. Remember, all other things at constant is the narrative of the forex market. So you don't just want to get this and get into the chart and begin to take position. You want to really ensure that you carry out an holistic analysis, such as what we'll be showing you when we move to the technical storyline. So after you have done the fundamental storyline, you want to check what is the risk on tone in the market. Then thereafter, you still now want to confirm. Let's check our panic index, which the one we call the VIX, the volatility of S&P 500. What is the volatility of this risk on? Do we have any element of fear in the market? So what we do is we look at the VIX, and once the VIX is giving us a figure that is below 20, is a confirmation, like is we are now confirming it that there is no fear in the market. As much as the S&P 500 index, the Nasdaq Composite Index, and the Dow Jones Industrial Average Index is giving us that there is a risk on because we have a bullish structure in the market, the VIX is showing us the level of panic or fear in the market. So the 20 mark is what shows us if there is going to be any concern to begin to consider our position or decision of risk on. What that means is that once you check your VIX and your VIX is below 20, is confirming that there is no fear in the market. And of course, the last one we want to look at before we now draw clear conclusion or of the risk sentiment overview of the market, which is what will now lead us into which asset we are going to pick and what are we expecting in terms of capital flow when we pick this asset or currency pair. The last one is the DXY, and this is very important. The DXY, I want to say this and re-emphasize it in case you have not heard of it before. Dollar is the king in the forex market. Dollar is king. You don't want to joke with what dollar is doing. It's very important for you to know what is the direction of the DXY, the dollar index. Dollar index is when they have the dollar pair against the major currencies. So if the dollar index is giving you a bearish structure, it means that there is a sell American narrative or sell dollar narrative, which we call dollar aversion. So last week we overviewed this as at that time last week, if you can see this screen, as at last week we were here and we concluded that there is dollar dumping, which we call dollar aversion. And you can see over the week, from last week till now, the investors, they are still predominantly dumping dollar, which means confidence is moving away from the dollar. And this is very central to where capital will be flowing into on a global scale. I want you to place importance on the position of dollar in the market. So now, having said this, let's just quickly now look at few assets that we can analyze together, then we can project. And of course, if I have the time, I will show you what we projected last week and how some of our projections played out pretty well. So last week, we consider, I think, 2 or 3 of our majors. So let me quickly say this: at Potential Miners International, we have 7 majors and we have 5 minors. 7 majors means these are the assets that we want to focus on to start with. Then if we now have opportunity on other assets, we can now take it. But the 7 major, they are the assets that we focus on, in our analysis as a platform. So we start with the gold, which is XAU USD. And that's going to be the first example of our analysis, the analysis we are going to do today. So let's look at gold. What are we looking at? Don't forget, at Potential Miners International, I've said it that we have three phases of analysis. We have the fundamental analysis, we have the sentiment analysis, and we have the technical analysis. Let me quickly reiterate what I have said over time. I mean, in at the beginning, we noticed that on the sentiment storyline, there is a risk on dollar aversion. What that means, you will notice that gold is pair against the dollar. What that means, in fact, the dollar aversion tone is what has been driving gold since last week. You know, so what that means is that our expectation, because of the dollar aversion or sentiment in the market as of today, 27th of January 2026, we expect gold to still push higher. However, you are not going to jump it into gold because our bias or expectation is for a buy. We want to look at the technical, structure. What are we to be expecting at a technical level? So the first thing you want to see to double confirm what the storyline from the fundamental, the sentiment has been telling us is what is the directional bias. When you now come to the technical analysis now, the first thing you want to gauge is what is my the directional bias. The directional bias is given to us, or we view our directional bias looking at the weekly, and of course we have this directional bias gauge. This gauge is what we use this gauge a lot, and it has been helpful to really help us to spot on what the directional bias is. So once you have the price above the cloud, you know that the directional bias for that particular asset is a buy. And if is it the reverse, if the price is below the cloud on the weekly, now you know that the directional bias is a sell. So for gold, what we are expecting from the sentiment storyline, which is the optimization protocol, is that there is risk on dollar aversion, which means that dollar will be dumped predominantly in the course of the week looking into next week. So we are expecting, if there is going to be dollar dumping, there should be a reasonable push up on gold. A reasonable push up on gold. All other things held constant. So what we are looking at is to say, okay, if there's going to be a reasonable push up on gold, how can we position for gold? Yes, on this live discussion, we don't usually call trade because we don't want to force any trade. That is why we always advise people to connect to our Telegram channel, so that if there is any trade setup that matures in the course of the week, we can drop it there. And of course, if you trade with the PMI approach, you can now pick the trade and make money with us as we make money. So what we usually do is to tell us what is our bias for the week. So on gold, our bias is a buy. Now when we check the technical analysis, or this, we start the technical storyline, we notice that the directional bias is still a buy. So we are still now going to look at what is the structure and tide. Obviously, the tide is a buy on gold and the structure is a buy. So what that means is that all other things held constant. Since we have gotten a daily correction here, by the time you move to the 4 hours, if you have any break around this place, any break around this 5,111.510, is going to create a break of structure, or what we call change of character in this case. So after that change of character, you are expecting to position for a buy on gold. However, I will advise that you connect with us on our Telegram channel, so that you can know the exact place to position your entry and make ratio 1-4. We usually take ratio 1-4 on our cash flow model, which of course is going to be a massive profit for you, especially if you are a beginner trader. For you to risk $10, or you risk maybe $20 to make $80, risk $10 to make $40. That's how we trade. So, and that's the position on gold. So in case you have any question, you can drop it on the comment section. If I have enough of time, I want this live record to be, I mean, to be very, very brief. We usually use 49 to 40 to 50 minutes, but today I want it to be as brief as possible so that we can have a very short uh, session today. Okay, so having said that, let's just pick one or two more assets and see what we have. For Euro USD, let's see what we have on Euro USD. So last week we talked about Euro USD and we said that for Euro USD we are expecting a buy, as at that time the price was around this place, and we said it that on Euro USD don't sell. It's not expect You are not expected to sell. You should position for a buy. Of course, eventually the trade moving, and we followed this trade on the platform last week, and we followed it pretty well and we marked out our entry. Just that we were not able to post it on the Telegram, so that because we don't usually post too many trade, we only post selected trade, so that we are not going to really overexpose our beginner traders to a lot of trades. So but at the platform we follow this trade and it played out the way we have identified or projected it. So for this week, what we are expecting is that we let's look at the directional bias. The directional bias is still a buy. Then what is the structure and the tide? The structure is still a buy and the tide is a buy. What that means is that for this week, looking into next week, we are expecting that Euro USD is going to buy predominantly. Now, it doesn't mean you will start buying from here. You should wait and look for, a proper entry. If you know how to apply the PMI strategy, you can apply that or connect to the Telegram channel for you to get trade ideas. So we are expecting that on the daily we should have a full day correction. Then after that, we can now be looking out for trade opportunities. So what that means is that on Euro USD, our expectation is still a buy. Our expectation or bias for the week is a buy. And of course, we are expecting a massive buy that can deliver ratio 1 to 3, ratio 1 to 4 on the average on the Euro USD. So let's quickly look at one other asset to say, let's pick one from the minor. Let's pick AUD JPY. We followed AUD JPY last week also, and it delivered. Now, the reason why we are picking some of these assets is because of the narrative that we have. We have risk on dollar aversion. What that means is that large volume of capital is going to be flowing into high yield currency such as AUD, while a greater chunk of the capital will be flowing out of a low yield currency like JPY. So picking AUD JPY is based on the optimized, asset or currency selection that we have done in the first phase and the second phase of our analysis. So you don't just get to the chart and pick a particular currency pair to trade. There must be valid fundamental and sentiment reason behind, rationale behind your selection of assets, and that is what we do. So we are also expecting a buy on AUD JPY, all other things head constant. Why? Because the tone of the market as of today, 27th of January 2026, is a risk on dollar aversion. So if the tone of the market continues, we are expecting that AUD JPY should still give us a push to the upside, to say maybe somewhere around this place, a push to the upside that can deliver an average of ratio 1 to 4, and that is very important. Ratio 1 to 4, something like this. So but then this is still the weekly. We look at the tide and the structure. You see, the tide is, when you get to the daily, you look at the price. Is it above the cloud? If it's above the clouds, that is the tide, which is in alignment with the directional bias. Now, when you now look at the structure, this is the structure. We have a tool that draws this easily. You don't need to stress yourself. If you don't have this tool, you can probably reach out to me on the comment section. I'm going to send it to you. It's for free. You'll just set it on your trading view, and then you'll be able to get this structure, plotted out. So we have the structure intact. The structure is a buy, the tide is a buy, the directional bias is a buy, the sentiment storyline is telling us that we have risk on dollar aversion. So we are expecting a move from this place, on AUD for the week. All other things at constant, we are expecting a buy on AUD. So because I don't want this video to be too long, I'm going to probably view if we have any question for the week. Okay, there's no question as of now. So I just want to wrap what we have for today. So I want you to take note. We have decided at the platform level to come up every Tuesday 11 a.m. To have a live session with our community of traders. And the reason is so that you can have a bit of confidence, on the asset you will be picking for the week. So for instance, this week, the summary of our trade projection is that you look for a buy on gold. We are positioning for a buy on gold. We are positioning for a buy on Euro USD. We are positioning for a buy on AUD JPY. Now, for you to really have opportunity to pick trades that we pick at the platform, you might need to connect on the Telegram channel so that it will be very easy for you to know where to enter and where to exit. Until I see you in our next video or any of our live stream channel or event, I remain Mr. Akimbode, the King of Waves. Thanks for listening. God bless you.